So the data on the industrial sector is out, and in the previous session or the lecture we had seen the core industries, how they are doing. Now in the same manner we would today be looking at the purchasing managers index, that is PMI, as well as the index of industrial production. Now these are also related to industry, however in PMI there is also services sector involved, but at the same time industries are also involved, and of course index of industrial production is specifically related to industry. So we understand why they are in news, what about them, and we will understand each and everything that is required with respect to both of them for UPSC Civil Services examination. So first things first, why are they in news? The purchasing managers index has improved considerably in such a manner that it is at its highest level as compared to the last 3.5 years. So this is very important. Secondly, why index of industrial production? Now the industrial sector has actually grown. Major reason was the growth of the core industries also, but entirely the industrial sector has grown. So the index of industrial production is also doing amazingly well. That is why they are in news. So let's deep dive into both of them. Let's start with an MCQ. We'll start both of the topics with an MCQ. So the MCQ with respect to purchasing managers index here is, consider the following statements with respect to purchasing managers index. Purchasing managers index. Statement 1 says PMI is an indicator of manufacturing activity only. Now please understand that in UPSC whenever you come across a statement which has extreme words, more often than not they are wrong. I will not say every time they are wrong, but more often than not they are wrong. So if you are trying to tick them as right, please think again. That's point number 1. Point number 2, if you are left with 2 options and you have to take a call based on the extreme statement, generally those extreme statements would be wrong. So remember this when you solve. So here, and how do you identify those extreme statements? With the presence of the word only, never, right? For example, mangroves, trees, mangrove forests are present throughout the western coast of India. Now don't you think that there might be a bit of gap? Throughout is an extreme word. So like this you can identify the extreme statement in any subject's question per se. Now, so this looks like an extreme statement. It is actually. Second statement says that it is a survey based measure that asks the respondents about the changes in their perception of some key business variables from a month before. Now please understand that in an economy you will say perception. So it is talking about the perception. So whenever you talk about the perception of anything, you may think, sir, if it is perception, will it not be inaccurate? Will it not be opinionated, subjective? Yes, that is absolutely right. It will be like that. But at the same time, we need to also understand that in economy, perception is very important. Why is it very important? If the economy's morale is down, perception is down, the consumer behavior is such that they don't want to buy any product, the economy may slow down. So their perception, what is actually happening in an economy is different. But what is their perception? If their perception is that the things are costlier, so they would want to save more, even if actually that is not the case. So perception plays a very big role. Also, you may know that when demand increases, what will happen? The businesses would try to increase the supply also, right? Now, when demand increases, after increasing, there would be a lag for increase in supply. But if you can perceive the demand to be increasing in the future, you can actually start increasing the supply beforehand only. So the perception of what is going to happen based on what has already happened, if you get that perception, you can take better judgment calls. So that is very important. And actually PMI is nothing but a survey based measure. A survey based measure. Other measures in economy which are there, let's say consumer price index, wholesale price index, these are very factual. They calculate the data and give you the results. But this is survey based, wherein you are asked the questions. So it's a survey based measure that asks the respondents about changes in the perception. Have your perception changed? What was your perception in the previous month, and what is your perception now? that perception is recorded and brought out as the purchasing managers index. So statement 2 is correct. When statement 2 is correct, this goes away, this goes away. Either of the two options would be right. So we are left with two options. You have to solve it. This would be wrong. It's an extreme statement. Correct answer would be B2 only. So now let's understand what is purchasing managers index. Of course, in the statement we understood it's a survey based measure asking the respondents the changes in their perception this month with respect to the previous month. What is the purpose of PMI? To provide information. Provide information about current and future businesses. Why current and future both? Because previously if I was not happy, I was perceiving the economy to be slowed down, but now I am thinking no, it's growing. So my perception will only get better. If previously I thought that the economy was doing well, now I think it's not, so my future perception, if what I will perceive with respect to the future is not going to be good. So not just the present but the future indicator also it is. Okay. So provides information of current and future businesses conditions. To whom? Now whenever this thing is out, so it gives the perception to the company, right? Company as in the company will then based on that take the decision. So giving this information to the company's decision makers, analysts as well as investors. Okay. Now it is calculated separately for manufacturing and services sector. So the important point to remember here is that it is calculated not just for manufacturing sector but also for service sector as well, and at the end they combine it together and bring it as a composite index also. Okay, generally you will see whenever things are getting calculated separately, they do that separately so as to have the separate data as well as a combined data. For example, in Human Development Index HDI, you calculate HDI of female separately, male separately, so you get that data plus a combined data as well. Now, this is based on a number from 0 to 100. Now, in this 50 is a cutoff, meaning the number above 50 would be positive, would be good. In future, you can expect things to improve, grow and expand. So, a number above 50 means expansion. Whereas, if it is below 50, it will denote contraction, that the economy will slow down, will reduce in size. If it is at 50, that means there is no change. So, generally, majorly it will be either above 50 or lower 50, right? Exact 50 is difficult because it's survey based, but it is still possible. If it is 50, it would mean there is no change. These are factual things, please remember it. Now, again, the reading of the PMI, how to read it? So, if PMI of the previous month is higher than the PMI of the current month, PMI of the previous month was higher, meaning expansion was happening, but now it has become lower. So if it has become lower, that means what? Is it a good sign? No, it's not a good sign. So if the previous month was higher than the current month, it represents the economy is contracting. The economy is contracting, shrinking. Shrinking would be an extreme word to say, but it is contracting. Now, this is released at the start of every month. So the frequency is high. Frequency is monthly. So this is a good point. Plus release at the start of every month. So you can plan out the month properly based on this. Now, who compiles it? IHS Markit compiles it for more than 40 economies. Now, IHS Markit is a constituent of S&P Global. What is S&P Global? It is Standard and Poor's Global. What is this Standard and Poor's Global, S&P Global? It is basically a credit rating agency. And IHS Markit is a part of it, which brings out your PMI. I hope that's absolutely clear. Now let's move on to the Index of Industrial Production. Again, starting with an MCQ. Consider the following statement. IIP is a composite indicator that measures changes in the volume of production of basket of industrial products. Yes. So index of industrial production, it will talk about the changes happening in the volume of the basket of industrial production. Base year is 2011-12. Yes, of course. In fact, presently the majority of the indices are having base year 2011-12. Okay, majority, not all of them. So both statements are correct. So now let's understand what is index of industrial production. Again, the first statement of the question, indicator that measures what? Changes in what? The volume of production of industrial products, of course, during a given period. Now it is PMI was compiled by IHS Markit, a part of SP Global. This is brought by our own government, you can say, compiled and published monthly. This is also published monthly, so the frequency is high for this also, as this is also produced monthly by the National Statistical Office under the Ministry of Statistics and Program Implementation, known as MOSPI. So brought out by MOSPI. Further, it is a composite indicator measuring the growth rate of industry, and this industry is classified into two separate groups. One group is broad sectors that consist of mining, manufacturing and electricity. This is a broad sector, the entire sector of mining, manufacturing and electricity, plus use-based sectors, that is basic goods, capital goods as well as intermediate goods. What are basic goods, capital goods and intermediate goods? See, basic goods, the bare minimum primary goods. Capital goods would be huge big goods which themselves can generate revenue, they are assets. And then intermediate goods, which would be, let's say, an intermediate good can be a good which is a raw material for production of something else. That is your intermediate good. Again, the base year here is again 2011-12. So you can remember it together. Both of them have the same base year. Now, what is the significance of this? Again, these indicators, these indices are even CPI, WPI, PMI, IIP, all are used by policymakers, by business persons, the government, the decision makers, in order to plan for future, in order to decide what needs to be done in the future. And that's what it will say. Used by government agencies, the Ministry of Finance, Reserve Bank of India, for what? For policy making purposes, basically decision making purposes. Now, it is very relevant for the calculation of quarterly and advanced GDP estimates. Why is it relevant? Because industry forms a part of the GDP. Our GDP consists of what? The GDP of agriculture sector, the GDP of industrial sector, the GDP of the service sector. So this index of industrial production is giving you an idea about the industry. So that will play a role in telling you quarterly and yearly advance estimates of GDP. What is advance estimates of GDP? When that date has not yet passed, but you are estimating in advance what could be the GDP likely. When the time has passed, then you can do the actual calculation, but beforehand, if you want to do, you do an estimation, a logical guess which is there, an estimation which is there. So